Hello. So let's take a look at Nvidia, right? So Nvidia, P ratio of 64, P ratio of 64, which is way above market. I guess what we're trying to figure out is whether or not you should buy, or is Nvidia overvalued or undervalued. I can't tell you what the price of Nvidia is, a real price, right? But let's find out whether or not what the market is saying. What the market is basically, the P ratio is at 64. That's way above the average. But then again, the company is growing quite a bit, and there's a lot of news about AI. The bid is 1.75. That makes it very much more volatile than a regular stock. But the beta, what is it really? It's based on historical data, and it measures just the intrinsic and mostly, the value and the volatility of the stock itself, assuming that's the only one that you own, that you don't. That's basically on a portfolio discussion. So at this point, the beta is 1.75. All you need to know is that it is volatile, but don't rely too much on that information. The EBITDA, which is real, is 50 billion. And the price is $1,134. That's a great price. That's a very high price. But then again, 50 billion, they were making 30, 11, 7. So the company has been growing very fast. The question is, what is this telling us? What is the market telling us? I mean, yes, the beta is saying this company is very volatile, which means it's going to go up. If the market goes up by 1, they go up by 175. The market goes down by 1, they go down by 175. They go a lot faster, right? So what you want to do is, what should I think about this? The way you want to think about it is, what you can do is you could take the 50 billion, which is the EBITDA. So basically the market capitalization, right? And that gets you about 2.7 billion. If you take 50 billion divided by 2.7 billion, they give you 1.83%. What does that mean? Well, basically, if I give you $1,000, forever, and the rate is 10%, that amount of money today is worth 10,000, and this is where this is being derived. Now, when I get that at 1.83%, it's not the yield, it's not how much money you're making, it's how the market is viewing the stock. When you think that the risk-free rate is at 5%, 1.83% sounds pretty low, maybe too low. So when I see a PE ratio of 64, I see a beta of 175, and I see my yield, my cap yield, as I will call it, at 1.83, I'm saying be careful. Plus keep in mind, it has been shown that you make money with low PE stock, not high PE. That ship has sailed already. But most importantly, if you're going to get into this stock, you need to know what they make. You need to understand what it is that they do. This is what Warren Buffett says, right? I'm not big into diversification, but I buy what I understand. If you don't understand this thing, what they do in the future, forget all these numbers, because you need to realize in investing that you know that you never know.